Ladies and gentlemen, I have just been contacted by one of my subscribers who works at one of the major US banks, and what they're telling me is right now the banking management and banking executives are absolutely terrified. And by what we've seen today, they have absolute reason to be terrified because many people said that the banking crisis was over, the Federal Reserve has saved the day, but no, this is just the tip of the iceberg, everyone. The house of cards has been exposed for all to see. The public is waking up, people are withdrawing their money like crazy, and banks are in full-on panic mode. So everyone, what events have led up to this? Why are the banks so scared? What exactly kind of information did this banking insider tell me? And what events happened today that tells us this is only the beginning? Well, that's exactly what we're going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, first things first, we need to talk about what happened today, everybody. First Republic most likely headed for FDIC receivership, sources say, and their shares collapsed 40% today. Now, I think this is exactly what's going to happen. There's some talks with some other major banks that they're trying to get to buy them before they go into FDIC receivership, but we think this is the most likely scenario. What's going to happen, and then after go receivership, then maybe there might be some banks that come in and try to buy up everything for pennies on the dollar. And look what's happened to their stock price, everyone. We can see it has absolutely fallen off a cliff, down 97%, and there's going to be even more banks face the same fate. The FDIC is asking for other banks for potential bids on First Republic if the regulator were to seize the bank, and sources told there is still hope for a solution that doesn't include receivership. First Republic told our CNBC on Friday that we're engaging in discussion with multiple parties about our strategic options while continuing to serve their clients. Well, I wonder how much clients they have left, everybody. If there is clients that still have their money in First Republic Bank, well, you've had so many warning signs. I don't know why you didn't pull out your money months ago. It was reported Wednesday that First Republic advisors were preparing to pitch larger banks on a plan that would let the regional lender sell bonds and other assets at an above market rate and then raise equity. Now again, this is another absolute crazy thing that the banks are doing right now. What they're doing is they have these huge losses on these bonds. So some banks are able to go to the Federal Reserve and sell those bonds at whatever rate they paid for it. And what First Republic is trying to do is actually sell these bonds at the above market rate. Now, this is completely crazy. If you or me go ahead and make a bad investment, we can't sell our assets at whatever price we paid for. So the banks, with capitalism, if we did still have capitalism, which we don't anymore, if we did still have capitalism in the US and in the West, you should fail. You made a mistake, you have to own it, and you have to pay the price. The sales would result in a loss for the banks that buy the bonds, but could be cheaper long term than letting the bank fail and getting seized by regulators. Reuters also reported Friday that US officials, including the FDIC, Treasury Department, and Federal Reserve, are coordinating meetings with other banks to broker a rescue plan for First Republic. Well, you know what the problem is, everyone, and one of the things this banking insider is telling me is a lot of the banks are facing the same issue. People withdrawing their money, they're taking it out of the banks, they're buying other alternative assets or other means of exchange, like for example, gold, silver. And a big thing that's been happening, which hasn't happened before, is people actually putting a lot of their money in Bitcoin, because what they can do is they can have it in cold storage. So you buy the Bitcoin off the exchange. What you should do straight away, take it off the exchange, and you can actually self-custody. So it's very, very hard to, have $1 million in cash. And I'm not recommending people do this, but what some people are doing, they may have 500,000, etc. They're putting it in Bitcoin and they're self-custodying it. So that way, if whatever institution fails, they still have their money. Well, that is if Bitcoin doesn't go down in value. Now, again, for the people that don't know why these banks are having these big issues, is very, very simply what happened is when interest rates were at rock bottom, they went and brought things like mortgages and bonds. Now, say, for example, if you buy a mortgage or if you invest in a mortgage and it's paying 2% interest, but then all of a sudden now you have mortgages that are paying 7% and bonds that are paying 4 or 5%. Why would you want a bond or a mortgage that's only paying 2%? So then what they have to do is discount these assets, these bonds and these mortgages. They lose value if they have to sell them before they mature. And this is what's caused massive losses for these banks that are holding all these mortgages and bonds, because interest rates have gone up so rapidly that these assets have now collapsed. And what happens is when people withdraw their money, they have to sell these assets to give the deposit their money back. But what's happening right now, there's so many people withdrawing their money and these assets have fallen so much in value that there's not enough money to go around. And that's another thing that this banking insider is telling me is why they're so scared. The bank's massive deposit outflows came after the collapse of Silicon Valley Bank and Signature Bank, which we discussed last month in March. And the nation's largest banks, including JP Morgan Chase, they've already held out First Republic and they've given them $30 billion in deposits. And this is probably why JP Morgan may be one of the banks that buys First Republic, because of that $30 billion they've already given them. Now, it'll be very interesting to see if taxpayers actually foot the bill for some of this, and then JP Morgan actually save some of that $30 billion they've lost. Look at this, JP Morgan PNC to buy First Republic after FDIC takeover. First leaves taxpayers holding the toxic stuff. So a seizure and sale of First Republic, which would wipe out the equity of the bank and potentially impose losses on creditors, could come as soon as this weekend. Now, JP Morgan is already the largest US bank and is about to get even bigger. And what they're hoping to do is scoop up all the good assets on First Republic Bank's books and chuck the rest of the toxic assets on the US taxpayer. And it isn't immediately clear whether the $30 billion in deposits funneled by JP Morgan and other banks in First Republic will be treated as insured funds. Now, this is another absolute crazy thing that the FDIC did and the Federal Reserve did with the collapse of Silicon Valley Bank. All their big billionaire friends that had money at Silicon Valley Bank and all the politicians that had money at Silicon Valley Bank, they got all their money bailed out. They had insured all deposits, and there are even talk now of insuring the entire US banking system. So I don't know how you would feel about JP Morgan by having taxpayers pay their $30 billion in losses. Again, what is sickening, what the banks are doing is they're trying to pretend we still have capitalism, but really what they're doing is they're capitalizing the wins and they're socializing the losses. But again, if you and me make a bet or make an investment, they still try to say, no, capitalism, you took a risk, you took a bet, you lost, you have to pay the price. Same if you're a small business, you try to start a business, you're struggling, you can't run to the Federal Reserve and get a bailout or get a loan. They'll say, look, this is capitalism, baby. You're going out of business. And look at this. Fed says it failed to act on problems that led to Silicon Valley Bank collapse. Well, this is just what we see again and again and again. The Federal Reserve doesn't try to fix problems before they arise. They wait for things to break and then try to fix the broken pieces. Because if you think financial YouTubers' predictions are bad, the Federal Reserve has predicted absolute zero financial crises. They'll tell you everything's fine until it's not. But you know what's another big punch in the face by these central bankers is what they've just said in the UK, but really this applies for everybody. So look at this, everyone. Bank of England economist says people need to accept you are now poorer. So that's right, everybody. They printed money like crazy. They devalued your hard-earned money. They created crazy inflation. They sent the price of energy, food, and everything soaring. They gave a bunch of money to the banks. But you, the people, you just need to accept being poor. It's not our fault you're poor. It's your fault you're poor. And really, you should have nothing and be happy. Have a smile on your face. Even if you can't afford, food, energy, you should be happy. I don't know about you, but this reminds me of something that we were told would happen. He said in response to higher bills and other costs rising, workers had responding by asking for wage increases and businesses were charging more. The UK inflation rate, at which has risen to 10.1% in the year to March, and that rate has dipped last month from 10.4%, but that does not mean prices are falling. It means they're rising at a slightly lower pace. So this is absolutely crazy already. UK still has inflation at over 10%, and this is the official figures. We all know the real figures are probably at least double that. And you know what they're saying the problem is here? They're saying the problem is workers are asking for a pay rise so they can afford just the basic essentials: rent, accommodation, petrol, food, etc. They're not trying to, live a luxury lifestyle. it is now becoming, unaffordable just for the basic essentials. So again, it's the workers' fault, the reason why we're having this crazy inflation, not the central banker's fault at all. And even though people are asking for a pay rise and people have been getting pay rises, it's not even coming close to keeping up with the rate of prices are going up. But what you're wanting to know is, okay, what other things did this banking insider tell me? Well, he told me that they're having to set up new retention teams to try to keep from depositors withdrawing their money. When customers are calling up to close their banks or trying to take money out, they're sending them to other departments, other retention teams to try to figure out ways they can keep their money, because like what's happening, if they pull out their money, this means the banks, they're going to have to sell these assets, which they're taking huge losses on, and they're running out of cash. So these retention teams are pretty much begging customers to stay. They're trying to find new incentives for them to stay. And also what he's telling me is happening right now is they're going to be restricting credit, tightening credit standards excessively to try to hold on to capital. And what he told me is, what was really shocking is, if the Federal Reserve didn't create that new lending program for the banks, the entire banking system would have collapsed just only days after the Silicon Valley Bank collapsed. So everyone, the reason I'm making this video and what's so important is the banking system is a complete house of cards, and it's been exposed for all to see. The Ponzi scheme has been exposed for all to see. They create money out of thin air and then they charge interest on it, and then they take your hard-earned money, then they gamble that money away and demand you give them more money. And another question we have to ask ourselves, how did we let the banks do this? First, banks were created. You just went and you gave your gold and you got a receipt, an IOU, to say, look, if you ever want to get your gold back, just give this paper note here and you'll get your real money back, gold and silver. But then what happened in 1933, the US confiscated all the gold, all the real money, because they went bankrupt. Then what they did, they said, look, if you want a job, you have to have a bank account. You're not going to get a job these days unless you have a bank account. Then another thing they did, they said, look, well, we're going to take control of your time as well. With 401ks, with superannuation, the bank has all of our future money and they're gambling it away. And the last thing I think they are going to do, and why the central banks are trying to push the central bank digital currency so hard, is they are going to make cash illegal and they're going to ban withdrawals altogether. So everyone, you need to educate your family and friends to tell them that their money is not safe in the banks, that the banking system is a complete Ponzi scheme and a house of cards, and we need to find other decentralized systems like gold, like silver, and like Bitcoin. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.